These half-year results are another record for the group, reflecting the high quality of our business, with revenue, adjusted profit before tax and the interim dividend all showing strong double-digit growth. I owe a huge thanks to everybody in all of our businesses, our partners and our supply chain, and all our clients. Thank you, everybody. We have seen some of the challenging market conditions from 2023 reduce somewhat. While inflation is now becoming more manageable, supply chain insolvency continues to remain a real concern. The diversified nature of our decentralized business, our strong culture, core values, and our empowered teams have enabled us to continue to grow and strengthen our businesses organically. Our focus on cash and our strong balance sheet has enabled us to continue to make the right decisions for the long term, driving sustainable growth and allowing us to increase the interim dividend by 15% to 41.5 pence per share.
What a really strong set of results for the first half of this year, with revenue up 14% to 2.2 billion, profit before tax up 17% to 70.1 million, and the interim dividend also up by 15% to 41.5 pence per share. Our strong balance sheet continues to serve as a real competitive advantage in both our work-winning efforts and securing our supply chain. Net cash at the end of the period was 351 million, but what's really positive is that the average daily net cash for the same period was 372 million, and that's 104 million pounds higher than this time last year. All the while, we have a strong and high-quality order book of 8.7 billion pounds, which provides us with a great platform to deliver our revenues for the years ahead. In construction, we have continued with our strategy of careful contract selectivity, with a strong focus on operational delivery and risk management, enabling our profits to grow by 18% to 14.1 million at a margin of 2.7%, right in the middle of its target range. Positively, order book levels sat at 900 million at the end of the period, with a further 1.2 billion pounds of work at preferred bidder stage. In infrastructure, a really similar strategy to construction, with a strong focus on discipline and delivery. Both factors have enabled really strong growth in revenue and profits, increasing by 24%. Overall, profits rose to 19.7 million in the period, with a margin of 3.7%, again right in the middle of its target range. Order book levels continue to remain strong at 1.7 billion. Now, Fit Out delivered another quite exceptional result. Profits rose by 36% to 41.3 million, with a margin of 6.6%. Now, that wasn't just off the back of significant revenue growth, but really good operational leverage. At the end of the period, Fit Out had a substantial order book of 1.2 billion pounds of work, followed by a pipeline of really good opportunities at various tender stages. The remediation programme continues to progress really well in property services under the leadership of its new management team. As a result, we have incurred operating losses of 11 million in the first half. That's been largely impacted by the exit costs relating to a small number of underperforming contracts for which we've negotiated an early release from. Now, as a result of this, our order book has reduced to just over £1 billion as we've removed the future revenues for those contracts. Overall, we remain confident of turning this business around and returning it back to profit in 2025. In partnership housing, our focus on long-term partnerships with the public sector for contracting work has continued to provide some short-term resilience against a slowly recovering housing market. Revenues improved by a modest 2% to 381 million on the back of good and strong growth in contracting, which has continued to provide a short-term shield effect as we've seen open market sales gradually recover. Overall, profits went up 16% to 11.7 million. With a strong order book of 2 billion and a visible pipeline of another billion, we remain both excited and confident about our medium and our long-term ambitions for this division. And finally, in mixed-use partnerships, profits of £500,000 were lower than the prior year, as the business has been impacted by a longer hiatus between the number of projects completed last year and the fewer completions in the first half of this year. With 1.8 billion in the secured development order book, we're really excited by the several sizable new schemes where we are at preferred bidder stage, underpinning our long-term growth aspirations for this division.
Following our strong trading performance in the first half, combined with the high-quality secured order book and visibility for the rest of the year, we now expect to deliver a result for the full year which is slightly ahead of our previous expectations.